With that, let's talk about a handful of these names which are in fact contributing to this advance. And well, right at the top, we have Trent. Trent, it does seem like it's, just, every time you see Trent, every time you see the stock move up, advance by around 5%, 6%, 7%, and you feel like, okay, the stock is pretty heady. It's trading at rich valuations. Don't think it could go any further. Even as the markets weakened over the past few days, sure, Trent did move a little bit, but every time you see the market see a little bit of recovery, you see a sharper recovery on a name like Trent. And today it's up around 8%, and in fact, it is making another high. Even as we see and realize that, in general, as far as markets are concerned, we are not looking at too much of a recovery, but Trent is the one which is, in fact, currently trading at a lifetime high. And if I'm not mistaken, trading at 8,000 rupees for the first time. And, we have my colleague Mahima, who actually tracks this counter very closely as well. Mahima, let's start with what's going on. Clearly there are new developments which are contributing to this up move. But what's at the top of your mind? What do you think is actually driving this up move here?
Right, so a couple of things happening in Trent, but the most recent one being them foraying into lab-grown diamonds.
Sure.
There was an interesting Kotak note which said that, Trent has now launched a lab-grown diamond brand called Pome, and they'll be selling these in the West Side stores. And probably it'll take 1 year to launch, of course, but they're expanding into lab-grown diamonds, which is a significant move for Trent.
Right.
Secondly, they're also focusing on premium clothing, which is, eventually which will drive their margins going ahead.
Right.
Thirdly, they're also expanding their makeup business, which is branded under Studio West, also sold in the West Side stores. And, of course, we have to mention that, Trent was also recently added to the Nifty 50, which is also kind of adding, the kind of up move that Trent is seeing, positivity to the kind of up move that Trent is seeing. Just to, give you a brief about the foraying of lab-grown diamonds, well, they're expecting the rollout of EBOs in the next 1 to 2 years. And these lab-grown diamonds will be available at a 30 to almost 80% discount compared to the natural diamonds. Now, in terms of its fashion business, what we're seeing is that, they've registered a double-digit growth in Q1 itself, which was a like-for-like growth, which is not the case for a lot of retailers otherwise. And profits also are growing at a CAGR of 39%. Revenue growth is also at a CAGR of 39%. And emerging categories, which is, of course, on the premium side of things, has seen a 20% growth in terms of standalone revenue. And online reach is also growing for Trent, which is also adding to their overall revenue. In Q1, it was around 30%. So, and apart from that, one more business which is now picking up for Trent is the Star Bazaar business. Yeah, where in Q1, their like-for-like growth was in double digits, which was around 20%. So, all of these together is working very well for Trent.
Mahima, maybe this is not planned, but this question is something that perhaps weighs on everyone's mind. It's the Trent is undertaking lab-grown diamonds, and it doesn't come under Titan. We've also had another retailer, Senko, who says that they want a separate brand. And a while ago, you also did a story on the acceptance, or rather the lack of, with CVD. How does it all come together? Why is it that these guys are choosing different brands and different houses to have CVDs?
Right. So the idea behind choosing different brands is that, if they launch lab-grown diamonds under the same brand, their sales of natural diamonds will get affected. That's the major reason why even Senko Gold has a separate brand called Senes, under which they're selling lab-grown diamonds. And so Titan is not picking up, not foraying into lab-grown diamonds per se. But from what I understand, or what I believe, is that the back-end process, of course, will be taken from Titan by Trent, and probably that will help Trent in terms of converting the process and making the process easier per se. And in terms of the demand for lab-grown diamonds, when I did my story, I did talk to a few people who are closely working with the lab-grown diamond space. The idea of lab-grown diamonds in India is yet to pick up. That's the the major concern. Majority, almost 90% of lab-grown diamonds that are being produced in India right now are being exported.
Right.
Because the demand of lab-grown diamonds in US and UK has picked up, because now they've started to realize that diamonds are not a mode of investment.
Sure.
But they're just another jewelry that you're adding to your beauty.
Right.
So, and it's about time, probably 5 or 10 years down the line, and even India will, come around the fact that it's not an investment, and that sentiment attached to diamonds, will fall off, and probably lab-grown diamonds then will pick up. But of course, there's still time for lab-grown diamonds to, get that kind of acceptance in the market.
Absolutely, there's no doubt about that. But it's just that the fact that some of these savvy players are now picking up on what potentially could be a trend down the line. And Trent and Senko have certainly picked it up, and it's a wait and watch on how some of your other jewelers or jewelry retailers see this particular trend pan out. But Mahima, I reckon that to a certain extent today's up move is also triggered by a Kotak note. What are they saying?
Right. So the Kotak note is about the lab-grown diamond space. So what they're saying is that this development reinforces a caution stance on Titan. Of course, even if they launch it under a separate brand, Titan will take a hit eventually once lab-grown diamond demand picks up. What they're saying is that they expect direct or indirect impact that will weigh on the studded, the mix of studded growth for Titan, and this will eventually impact their margins as well. They're also saying that this Pome particularly offers LGD jewelry at a significant lower prices than natural diamonds. It will, for a 1 carat solitaire ring, it will be priced around 24,000 to 29,000. And the highlight of the note was that they've said that Pome could potentially be the Zudio of lab-grown diamond market, is what the note is saying. And of course, this will also impact the day-to-day jewelry that Mia and Carrot Lane is also selling under Titan right now.
Right, but again, can't not talk about valuations when it comes to Trent.
Absolutely. So, it's been trading at a multiple of 188 times P currently.
Right. And this is trailing.
Trailing P, yes. And even if it, consider the valuations going forward, 25 estimates as per Bloomberg is at 151. And 26 also is at 102 times. So valuations at any given point of time in the next 2 or 3 years probably are not looking any cheap. In fact, if we check the most retail precious companies with a market cap of over 2 lakh rupees, Trent tops the chart, and followed by Avenue Supermarts, which is at 90 times currently.
Absolutely. Of course, and we're not talking about some of your relatively smaller profitable companies like Nykaa and Zomato, because they've just turned profitable in the bottom line. We must mention and we must remember that Trent specifically also enjoys a little bit of a scarcity premium, because while the Tata Group is a promoter here, you have institutions which are in fact a bulk of the ownership as far as Trent is concerned. I am actually trying to get how much of their overall shareholding is with the public, and it's actually not a small amount. It's actually 22%, which also does mean that there is scope for a lot more volatility should we see even a small crack in expected earnings, or rather earnings as against expectations. And I'm actually really surprised to see that the public shareholding is as high as 22%. That's not the case for some of your other names, like something like perhaps Avenue Supermarts, where your overall public shareholding, well, prima facie is about less than 10%. Coforge is the other example, where once again your public shareholding is less than 10%. But in this case, this certainly is very, very surprising. So of course, can't rule out volatility out here. But Mahima, thank you so much for getting us all those updates and shedding light on Trent as well.